What is the right entity for managing all of your real estate? My name is Kris Krohn, and this is our partnership series. And in this video, I'm going to be talking about what are the different entity structures out there and which one should you be using for real estate and how does it all work? Okay, so check it out. There are S-corps and sole proprietorships and a number of different type of entity structures inside the United States. And we're going to be focusing on what's called an LLC, or a limited liability corporation. Now, an LLC is absolutely, every lawyer on the planet would agree that this is the preferred mechanism for real estate. You don't have to worry about double taxation with some S-corps. It is really designed to help you operate a business like real estate, but also create a layer of protection. You see, if you don't use any type of corporate entity, but you own real estate and you don't own that real estate inside of a corporation, what you do is, if you were to ever have a lawsuit or something bad were to ever happen, then basically there's no separation between your real estate and your personal life. And what you want is a big fat corporate veil that says, this is my real estate business and this is my personal life. And if you have a problem with my corporation or my real estate, that has nothing to do with my personal life. And I can tell you, after all the deals I've done, I've never had anything pierce the corporate veil. Basically, this LLC has kept me pretty safe. I've also had very few legal issues whatsoever, things that insurance itself couldn't handle. It's a pretty cut and dry, almost boring business that we've created. Sometimes I upset people because we're making these exciting gains and we're making all this money in our partnerships, but I call it boring because we figured out all the variables and we figured out what's fixed, what's variable, and we've basically turned it into a science. And it's really just a pile of ones and zeros doing the right things. It doesn't mean that we're guaranteed to win all the time, but it means that over the long haul, we're doing better than most other financial institutions and opportunities that lie out there. So an LLC is the business entity of choice that we're going to be using for managing our partnership or when you're putting another partnership together. Now, there are 4 specific things that I want to talk about today in relation to how you have this done correctly. First of all, when you file for an LLC in your local county, you have to file articles. These are the articles of incorporation. It's basically a 1-2-page document. It's got the city's official stamp on it. It's got your signatures, or at least the managing member, and basically says we've paid our filing fee, and guess what? We're officially in business. But there's something that needs to happen before that. That's the operating agreement. This is an internal document. The operating agreement is the agreement of operations. This is for me, it's generally a 20-page document, and it basically says, who are you and who am I? What are the roles that we're playing? In this operating agreement, it's going to say Kris and his team. Kris is the managing member, so he and his team are responsible for all the day-to-day activity. The funding partner is the person that generally brings money and says, I want to get in on these juicy deals. And the funding member brings the money or maybe the credit, usually both, but we can borrow someone else's credit if your credit doesn't work. And the funding member absolutely gets to be as day-to-day as they want. They get to ask whatever questions they want, but they generally prefer a little bit more of a more hands-off role. And in being more hands-off, it means that you can do what you're going to do, my team's going to do what they're going to do, and we create this 50-50 arrangement. 50-50 means that if the funding member or you put money into the business, then when it's time to have a liquidation event or sell property and we're not going to reinvest it, then the first money that comes out goes to you for putting money in. I want you to understand though something. I'm putting money in this too. I'm not putting the first money in, I'm rolling my profits in. So for example, we buy 3 properties, we put $30,000 to $50,000 down-ish on each one of them that came out of your 401k or IRA or something like that. And what ends up happening from that point is we end up taking those properties, we build them out, and then when we sell them, let's say there's a $50,000 profit on each one of them. So there's a $50,000 profit on one of them. 50 went in, the 50 came out plus 50 more. Well, once you're paid back, so to speak, your basis, then there's another $50,000 of profit. Half of that's yours, half of that's mine if we're 50-50. If we're really doing this long term, we're going to say, hey, here's our understanding in our agreement. We really want to reinvest and grow this into something. So let's take the original $50,000 down payment and roll it into another property. And let's take your $25,000 of profits, my $25,000 of profits, and put them into another property. Maybe the $100,000 will buy 3 properties. The point is we want to create the ongoing compounding effect, because here's the dream. You're putting little time and effort, energy in. My team's putting all the time and effort, energy in. And over time, this thing has cascaded into a lot of profits, a lot of cash flow, and what we would call a legacy. It's not a lot in the beginning, and it turns into as much as you want it to be in the end, because it's a function of time. And so with this vision, we keep rolling it forward to create more and more time freedom. Now you don't have to have your job anymore. Now there's a lot more freedom. Later in the series, I'll tell you what you can do to accelerate and go even faster. But the bottom line is the operating agreement more or less just says, you're bringing the money, I'm bringing the management, I'll bring the deals and do all the work. And once you've been paid back on any liquidation event, we're going to split the profits 50-50. I'm going to be reinvesting my profits every single time you are. And what that does is that just means we can pick up huge steam and huge momentum. I like to have the operating agreement done first before we actually file for the actual articles of incorporation. It's not ready to do anything else, and we're certainly not going to move forward on property until we have our understanding with each other. Now, I've paid a lot of money over the years to my legal team. I can tell you that my operating agreement is, if anything, perfect or just shy of perfect. It's what I've been using for partnerships now for such a long time. So our first week in the business together, that gets sent to you, you review it, and you let us know what questions you have or what you don't understand, because it defines the roles and how things are more or less going to work. Once we have the operating agreement done and signed on both parties, then we're going to go and file the articles of incorporation. Now, this operation agreement, this is internal. We don't ever have to post this anywhere. This is just for you and I to sign and say we understand how we're going to do things together. The articles of incorporation or organization, depending on what your state calls them, when we get these filed, we're officially in business. We can then go and file for a tax ID number. This is a social security number, if you will, for the business. And the tax ID number is what we need to open up a bank account. Now, this all happens relatively fast. Once we have this in place, we get the articles filed, we get our tax ID number. This partnership works really well inside the United States, so the government issues us our tax ID number. And with the articles and our tax ID number, we can go to a bank where I do all of my banking. We can both get on it. And what will end up happening is my bank account will issue us an account for this LLC instead of a person's name, for this tax ID number. And what are we doing with the business bank account? Well, first of all, my partners always get access to that so that they can always see what's up, make sure that everything's being done correctly. I've got a huge reputation and 15 years in this, and we're doing so much. We do this, to the penny. Everything is accurately tracked. The bank account is really just going to be managed by my internal accounting team, because they're the ones that once the home gets purchased, they're going to be the ones setting up the home on direct deposit so that the home gets paid every month on time and no one's credit's being messed with. If there's repairs, it means that they're going to be covering the repairs. The bank account is also where we're going to be housing what we call the sleep well at night account, the SWAN account. Now, this is important for you to note. On the first property we do, whether we need $30,000 or $50,000 as a down payment for the first one, we're going to take an extra $10,000 and we're going to park it in the bank account. $10,000 is more than enough to cover this while we're waiting for it to get rented out. And then once it is, every month the property manager will direct deposit the money into the bank account, will direct deposit the money out towards paying the mortgage, and everything is going to work. And over time, this account's going to build up. When there's a repair, it'll drop, and then it will build up higher and higher. And that's what it's going to do with time. If we buy a second property, I want to add another $5,000 into that sleep well at night account. So 2 properties, we're going to have probably 15 grand parked in there. 3 properties, we're going to throw in another 5 grand. We're going to have 20 grand. Now I'm going to tell you right now, 3 properties and 20 grand, it's more than enough. I'm doing that mostly for you because my partners, they're a little nervous in the beginning. What if there's a cash call? What if the property has unexpected repairs? We've taken care of it. And the accounts are full and they're healthy and they can manage themselves. Then when the accounts start piling up a lot more cash flow above and beyond, we'll have conversations about cutting some distributions to each other. That's kind of the fun part. But in the beginning, I like to keep most of that in the bank because remember, we're trying to take this money and roll it forward and build momentum, the snowball effect where it gets going faster and faster down the mountain. We're getting bigger and bigger and bigger, creating more and more compounding interest and benefit and growth. So can we take distributions throughout the way? Sure, but we'll have a conversation in philosophy on what's needed. It's very important in setting up this business that you don't put yourself at personal financial risk and that you invest your money that you intend to keep in real estate. For example, bad partner move. Hey, I had this thing happen in my life and I financially wasn't prepared for it. Now I need to sell a property so that I can get some money out and pay for that thing. I'm not saying that couldn't happen, meaning I'm going to be a good partner and work with you, but I'm saying, hey, please try to organize your financial life just like I am. That will never personally be a burden on the business. Why? Because we don't want to mess up the momentum. We don't want to mess up the business. We want one home to become 2 homes, become 5 homes, become 10 homes, become 20 homes, become 100 homes. That's how I got hundreds and hundreds of homes. And I want to show you how to do the same thing. So we set money aside that we can park in the real estate as patient money. And then we want to let it grow. If you're ever borrowing money from a home equity line of credit and it produces a liability, like you might have a $100,000 line of credit and we use it to buy 2 or 3 homes. But now there's maybe a $700 a month payment. We will make sure always that the cash flow from the portfolio pays for that as an expense, as a loan to the company, because I don't want your financial month to month to actually be worse off for doing this. If anything, we want it what? We want it better off. So friends, that's everything you need to know about entities. And just to give you the quick review, if we're going to partner together, or if you're looking at partnering with someone else, understand LLC is what you're going to use to hold your properties in. The operating agreement is what you should go through first. By the way, if you don't have money and you're watching this series because you're like, I want to find partners, you need the Partner Profits course. Go to kriskrohn.com and request information and my team will talk to you about it. Spell my name the right way. It'll help you get to the right website. But basically, I want you to understand that Partner Profits will teach you, it'll actually give you access to all of my LLCs and all of my operating agreements. So you don't have to pay $500 or $1,000 or $2,000 to lawyers to put that together. You can already access that. It's a bonus inside that course. Get the operating agreement. Once both parties are good, you file for your articles and your tax ID number and you go set up your bank account. All of that's happening so that we can actually go out and get a property under contract and let this partnership do what it is supposed to do. Hey, thank you for watching this video in this series all about partnering from A to Z. If you're watching this and thinking, you know, maybe I would be open to partnering with Kris, understand it's an interview process, and guess what? I got more than enough properties. That's the only reason why I've opened my doors to carefully handpick and select with my team's help the right people that I want to partner long-term with. So if you're enjoying this series, you've got some money parked on the side and you're thinking, you know what? I've got 6 figures sitting around in 401k, IRA, annuity, etc. I want you to click the link in the description, get in touch with my team. It's a specialty team that will specifically talk just about the partnering and see if we have a fit in working together. If you don't have 6 figures lying around, but you still have some money or maybe no money, and you're like, Kris, this is amazing. I want to partner with people. How do I do that? You got to go to kriskrohn.com, get your hands on the Partner Profits course. You can talk to a member of my team. We'll give you the LLCs, the operating agreements, the business plan that you can park in front of people and start making deals happen. Join us on the next video. We're going to talk about how many homes you can actually qualify for. If we're going to partner, you got to know how much can you do with banks before you need to go for outside help.